Hey everyone, let's talk about something uncomfortable, my investment failures. I've been there, chasing the next big thing, losing money, and feeling completely lost. When I was younger, I thought investing was some secret club for smart people, that I needed to be a genius to understand it. I saw all these headlines about people getting rich overnight, and I wanted a piece of that action. My family, we didn't really talk about money or investing, it was kind of a taboo subject. So I learned about it the hard way. I learned by making every mistake in the book. I started with this naive idea that I could just jump in and make a quick buck. I was in my early 20s, full of energy, and frankly, a bit overconfident. I saw friends, or at least people on the internet, talking about these hot stocks, these new cryptocurrencies, and I thought, why not me? I didn't have a plan, I didn't do any research, I just followed the crowd. It felt like gambling, but I told myself it was investing. One of my first big mistakes was short-term speculation. I'd buy a stock because it was going up, hoping to sell it for a quick profit. I'd check my phone every 5 minutes, my heart pounding with every small fluctuation. It was exhausting, and ultimately, it was a losing game. I'd get in at the peak, then panic sell when it dipped, locking in my losses. I remember one time, I put a significant chunk of my savings into a stock that everyone was hyping up. It soared for a few days, and I felt like a genius. Then it crashed, and I lost almost everything I put in. The feeling in my stomach was awful, a mix of regret and self-blame. I also fell for some pretty obvious scams. Looking back, there was this one project. They promised guaranteed high returns, like unbelievably high. I wanted to believe it so badly that I ignored all the red flags. They had a fancy website, lots of buzz, and a seemingly professional team. I convinced myself it was legitimate, that I had found a hidden gem. I invested a decent amount, and for a short time, I even saw some returns which reinforced my belief. Then, poof, they disappeared. The website went down, the team vanished, and my money was gone. It was a painful lesson about due diligence and the age. Old saying, if it sounds too good to be true, it probably is. Another huge mistake was not understanding risk management. I'd go all in on a single investment, putting all my eggs in one basket. I had no concept of diversification, no idea what a stop-loss order was, nothing. I just hoped for the best. This often led to emotional trading. When the market was up, I was ecstatic, feeling like I was on top of the world. When it went down, I was a nervous wreck, making impulsive decisions based on fear, not logic. I remember being so stressed out during market downturns that I couldn't sleep. It affected my work, my relationships, everything. My entire mood would depend on the color of my portfolio. Green meant a good day, red meant a terrible one. It was an unhealthy way to live. I lost a substantial amount of my hard-earned savings through these mistakes. It wasn't just a little bit. It was enough to make me feel truly defeated. It was money I had saved from years of working, money I had plans for. Losing it felt like a punch to the gut. It was at that point, after hitting rock bottom with my investments, that I had a wake-up call. I realized I couldn't keep doing things this way. I couldn't keep chasing fantasies of quick riches. I needed to learn, really learn, about how money works. I started reading books, watching educational videos, and following reputable financial advisors. Not the gurus promising instant wealth. I decided to completely change my approach. I let go of the idea of getting rich quick and embraced the concept of steady, consistent growth. I started focusing on building a solid financial foundation, prioritizing saving, and understanding low-risk investment options. I learned about things like index funds, ETFs, and how to build a diversified portfolio that aligns with my actual risk tolerance, not the one I pretended to have. I learned to control my emotions when it came to money. I developed a system, a plan, and I stuck to it. I stopped checking my portfolio daily, sometimes even weekly. I started focusing on the long term, on compound interest, and on the power of patience. Now, I'm in a much better place. I'm no longer making those aggressive, impulsive trades. My investments are diversified, and I understand the risks involved. I'm not aiming to be a millionaire overnight. I'm aiming for financial security, for a comfortable future, and for peace of mind. My current approach is about steady accumulation, protecting my capital, and avoiding unnecessary risks. I'm a big believer in automation now, setting up automatic transfers to my savings and investment accounts, so I don't even have to think about it. I also focus on understanding the basics of personal finance, budgeting, debt management, and emergency funds. These are the building blocks that I completely ignored before. So why am I sharing all this with you? Because I want you to avoid the painful lessons I had to learn. I want to share my failures so you can build a more solid financial future without making the same mistakes. My goal is to provide practical, down-to-earth advice for anyone in their 20s, or really anyone who is new to investing. I'm not some financial guru, I'm just a regular guy who has been through the ringer and come out the other side a lot smarter. So let me tell you how I fell into these traps, what I did wrong, and more importantly, how you can steer clear of them. First, about those quick profit schemes. I remember seeing ads, a lot of them, on social media, promising things like double your money in a month. It was tempting, especially when I was feeling financially insecure. I thought, what if this is the one? What if this is my chance to finally get ahead? I ignored the inner voice that said, this sounds too good. I invested in one such scheme, an online platform that claimed to use AI to make incredibly profitable trades. They showed daily returns, impressive graphs, and testimonials from people who claimed to have made fortunes. I put in a small amount first, and when I saw it grow, I got greedy. I added more, and then more. Then one day, I couldn't log in. Their customer support vanished, and the platform disappeared as if it never existed. It was a sophisticated fraud, and I, along with many others, was a victim. The lesson here, always be skeptical of anything promising unrealistic returns. Legitimate investments come with risks, and they rarely offer guaranteed high profits. If someone is pushing you to invest quickly without providing clear and verifiable information, run. My second major pitfall was chasing popular stocks without understanding what I was buying. I'd hear about a company that was suddenly surging. Everyone was talking about it, and I'd jump in. I didn't research the company's fundamentals, its business model, its financial health. I just bought based on hype. I recall a particular tech stock that was making headlines. It was presented as the next big thing, revolutionary technology that would change the world. I bought a significant number of shares, convinced it would only go up, but I hadn't considered the competitive landscape, the regulatory challenges, or the company's actual revenue generation. It turned out to be a classic bubble. The stock price was driven by speculation, not by actual value. Eventually, the bubble burst, and the stock plummeted. I held on for too long, hoping it would recover, but it never did to its previous highs. I lost a substantial portion of that investment. The takeaway, always understand what you're investing in. Do your research, look at the company's financials, understand its industry, and don't let hype dictate your decisions. Investing based on sound principles, not fleeting trends, is crucial. Third, my lack of risk management was a disaster waiting to happen. I would often put a large percentage of my portfolio into a single speculative asset. This is known as being heavily concentrated. I thought that if it paid off, the rewards would be massive. But if it failed, the losses would also be massive, which is exactly what happened. I had one instance where I was really confident about a specific cryptocurrency. It had a passionate community, and I thought it had huge potential. I put a significant portion of my overall savings into it, thinking it was a sure bet. I believed it was undervalued and due for a massive price increase. I didn't diversify across other cryptos or traditional assets. I was all in. Then, a major regulatory announcement came out that negatively impacted the entire crypto market, and this specific coin took an even bigger hit. My portfolio value dropped dramatically, almost overnight. I was devastated. I couldn't believe I had risked so much on one thing. I learned that diversification isn't just a suggestion. It is a critical component of risk management. Spreading your investments across different asset classes, industries, and geographies helps mitigate the impact of any single investment performing poorly. It is about not putting all your eggs in one basket, a lesson I learned the hard way. Finally, my emotional trading was a constant source of self-sabotage. I'd let my fear of missing out, FOMO, push me into investments, and my fear of losing money, FOLO, make me sell at the worst possible times. I was reactive, not proactive. I remember times when the market would drop, and I'd panic sell everything, only to see it rebound shortly after. Or I'd see a stock soaring, jump in at the top, and then watch it fall. These emotional decisions always led to losses. It was a cycle of regret and frustration. I realized that successful investing requires a level head and a disciplined approach. It is about having a plan and sticking to it, even when emotions are high. It is about understanding that market fluctuations are normal and not letting them derail your long-term strategy. Now, my approach is completely different. I start with a budget, understanding exactly where my money goes. This helps me identify how much I can realistically save and invest without putting myself in a precarious position. I prioritize building an emergency fund, something I completely overlooked in my early days. Having 3 to 6 months of living expenses saved up gives me a crucial safety net, reducing the pressure to make impulsive decisions when unexpected expenses arise. For my investments, I focus on broad market index funds and ETFs. These allow me to invest in a wide range of companies across different sectors, providing instant diversification at a low cost. I set up automatic contributions to these funds every month, a strategy known as dollar cost averaging. This means I invest a fixed amount regularly, regardless of market fluctuations. It helps me avoid trying to time the market, which is nearly impossible, and smooths out my average purchase price over time. I also pay attention to fees. High fees can eat into your returns over the long term, so choosing low-cost investment options is important. I aim for a balanced portfolio that reflects my long-term goals and a comfortable level of risk. I regularly review my portfolio, maybe once or twice a year, to ensure it still aligns with my objectives and to rebalance it if necessary. Rebalancing means adjusting the asset allocation back to its original targets. For instance, if stocks have performed exceptionally well and now represent a larger portion of my portfolio than intended, I might sell some stocks and buy more bonds to restore my desired balance. This disciplined approach helps me stay on track and avoids letting emotions or short-term market movements dictate my investment decisions. I've learned to value patience and consistency above all else. Wealth building is a marathon, not a sprint. It takes time, discipline, and a willingness to learn from mistakes, both your own and others. So, if you're just starting out, or if you've made some mistakes like I have, don't despair. It is never too late to learn and adopt a more sensible approach. Focus on the fundamentals, understand the risks, and build a strategy that works for you. Avoid the get-rich-quick schemes. Do your homework before investing, diversify your portfolio, and control your emotions. These are the foundational principles that I live by now, and I believe they are essential for anyone looking to achieve financial success and peace of mind. It is about making smart, informed decisions, not chasing fleeting trends or relying on luck. And remember, your financial journey is unique. What works for one person might not work for another. Educate yourself, seek advice from trusted sources, and build a plan that is tailored to your individual circumstances and goals. I'm here to share my experiences and insights, hoping that my past mistakes can serve as valuable lessons for you. Let's navigate the world of personal finance together, avoiding the pitfalls and building a brighter financial future. It is a journey of continuous learning, and I'm committed to sharing every step of it with you.